What's going on, everyone? We have a filing out of the NSCC, or it's an update rather, on the very important and long-awaited securities financing transaction service by the NSCC. Basically, a brief history. This was filed on July 22nd. This has been in the works for, years. On December 13th, they received NSCC's response to the Commission's request for additional information. And then the Commission shall notify NSCC of any objection no later than February 11th. And basically, Section 806 of the Clearing Supervision Act provides that the Commission may extend the review period of an advance notice, which is what this one is here, an additional 60 days. Here, the Commission is extending the review period for that 60 days because the Commission finds that the advance notices raise both novel and complex issues, as discussed further below. Specifically, the proposed change described in the advance notice would establish new membership categories and requirements and establish a new central clearing service for equity securities financing transactions, otherwise known as SFTs. NSCC described SFTs as, broadly speaking, securities lending transactions where parties exchange equity securities against cash and simultaneously agree to exchange the same securities and cash plus or minus a rate payment on a future date. Basically the same effect as a repo. In particular, the advance notice would expand central clearing at NSCC to include SFTs with a 1 business day term, or overnight repo, and eligible equity securities that are entered into either by members, institutional firms, or agent clearing members on behalf of customers. Currently, such SFTs are not centrally cleared at NSCC and instead are settled bilaterally. Bilaterally meaning they go outside of central clearing. The establishment of a central clearing service requires a number of changes to the NSCC rules to effectuate and manage the risk arising from the new service. For example, the proposed changes would encompass new membership categories including agent clearing and sponsored clearing models that do not currently exist at NSCC. In addition, the changes would establish new risk management features to allow NSCC to measure and monitor the risk arising from the SFT transactions, including a methodology to provide mark-to-market payments and to close out a defaulted member's portfolio, which I think that's what they're waiting on. NSCC would institute rules governing buy-ins, recalls, and accelerated settlement, which are generally designed to be consistent with how SFTs operate when settled bilaterally. Taken together, the rules would establish to administer this new central clearing for SFTs. It would raise novel and complex issues for NSCC. And let's see here. That's basically it. The proposal shall not take effect until all regulatory actions required with respect to the proposal are completed. Don't see a date. Oh, April 12th, 2022. That's your date. So let's go.